It's a 125.14.
We start, though, with the big news of the morning. David Faber's here to talk about KKR's plan to go public. The private equity investment firm could be valued at between $12 and $15 billion. I'm always trying to figure out who's benefiting here, David, and it's a lousy time for an IPO, so I'm not sure why to do it. So it has something to do with an elegant way of bailing out that euro.
KPE.
Is that why?
Well, it isn't really it isn't an IPO. It actually, they'll even change their S1. Their filing that's been on with the SEC for over a year now to an exchange offer. Correct. And they're going to be exchanging essentially shares in KKR. True KKR, the holding company that runs all of the investments and does all the private equity work and anything else they may come up with, for shares of this essentially closed-end fund that they listed on the Amsterdam Stock Exchange a couple of years ago called KPE, which is trading well below what they believe is its net asset value and has been a disaster from an investment standpoint. It was a captive fund, you remember. They raised $5 billion to invest essentially in their deals, in the debt and I believe the equity of their deals. It has gone down in value. They now will be exchanging KKR at a value yet to be known, of course, because the market hasn't decided what KKR is worth. But they ultimately believe it will be worth more and therefore is going to be a good deal for KPE shareholders, who will then end up owning 21%. I know it's complicated, of a combined of KKR. The partners owning the other 79%.
Those closed-end funds are notorious. The shares of the funds trade based on supply and demand, and they can trade at a 20% discount to what the assets in the fund are worth.
They believe that it's 22.25 is the actual net asset value.
It's a steal. But now
it will be subject to a shareholder vote. It doesn't have to be. This is essentially a captive fund of KKR's. They could just force an exchange offer, but they are going to give them.
You mean the KPE shareholders get the vote?
Which is why they're getting such a good deal out of this. It's a pretty good deal for the KPE holders.
It could be. I mean, you need to make a decision as to what you believe KKR is going to be valued at. They're talking about $1.2 billion in operating income, I believe, or so saying at 10 to 12 times. We think we could be valued anywhere between 12 and as much as $15 billion, and therefore 21% of us is worth more KPE than what you currently.
They're acknowledging that their market cap of KKR is 50% of what it was when they first thought about doing this. Wasn't it going to be 26
They're acknowledging
billion?
the comparable has come down a lot. And the comp, of course, is Blackstone. So they're basically taking the multiple of Blackstone, maybe even taking it down.
Which is down more than 50%.
Right. I mean, this has been a terrible time. They wanted to follow they wanted to actually get out first if they could have. Schwarzman beat them to it. Blackstone got out, what was it, May of 07? And ultimately has been down ever since. KKR has not had the opportunity to go public. This is a terrible time for private equity in terms of doing business, as we've said many times. They can't get large deals done because the debt financing is so hard to line up. As well, they have to put a lot more equity into the deals when they do get significant financing.
So anyone trying to read this as a thawing of the markets in any way has got it completely wrong.
Yeah, I would not think it is that. I think it is a business making plans for a long-term future. Henry Kravis is, 64? Number of the guys are getting older.
They don't cash out.
No, there's no cashing out, and in fact, they are putting a 16% of the overall company in order to rein equity down as far as they can into the organization.
Now, they're going to be okay.
6 to 8 years before they can cash out anything.
That's right. They're locking themselves up for
now mortgage. They can go month to month with their mortgage payments, not cashing out at this point. Kravis and Robertson.
Remember, they're still taking fees on all the $46 billion
they've got
invested.
Billions
46
of dollars.
companies, well more than 46.
Yeah, they don't need. But no. But this has nothing to do with, like, Schwarzman was able, what did he get, $700 million?
He took some money out. He kept a lot in there, but he did take a lot of money out. What they're saying, what the KKR guys are saying is this is not about whether we see the market turning tomorrow or anything like that. It gives us an opportunity to go public, to have money to pay all of our employees, to keep them with us, also to do acquisitions in the future. And I think that's an interesting point here. I mean, we don't know what financial assets are going to be trading where come the end of the year when KKR actually has a public equity, most likely. But one has to wonder whether it might give them an opportunity to do some expanding if they see something cheap. They will have the ability to go after it with their own currency.
But don't we still have the question in Washington about the tax structure for these private equity, the publicly traded ones down the road?
Absolutely. With the Democratic administration, a possibility, certainly one would expect that might change. that might change.
They've given too much money to the Dems. That'll never happen now.
I don't think so.
You?
Hedge funds have given more money to
go
Obama
after.
But hedge
It's not
funds
that
have
much
given
money.
more money to Obama.
It's not that much.
McCain's talking about corporate greed now.
I know, I saw it.
Wall Street being the root of all
yeah,
evil.
exactly.
Final point here, the $5 billion that they raised is invested in KKR deals. KKR says, hey, we like that. That is the $5 billion they raised through issuing KPE. And so that money will ultimately come back to them. They have created or will acquire $5 billion in capital. Right now it's invested in all their deals, but over time it will come back to KKR, money that they can use yet again to co-invest along with their limited partners.
I'm giving it the thumbs up.
Are you?
Don't you think?
I'd be curious to see what KPE is doing, or in Amsterdam, where it's trading.
And it's probably, at this point, they probably see some value in that. I've seen those closed-end funds. It's a horrible structure, usually, for investors, because it trades at a huge...
Right, it was a great deal for KKR. They were able to raise $5 billion forever and get fees on it. Why wouldn't you do that? But it has not been...
But it's like a liquid to try and get out. You have to sell it at a 22% discount to what the assets are actually worth.
They're saying it's a net asset value of 22.25. And it's trading, where was it trading? At 10-something, right? 11?
So
yeah.
it's a much bigger...
Yeah.
I thought you meant 22.5.
No, they're saying a 50. They believe it. They believe it's
below
50%.
net asset.
And by the way, they will return 22.25. And 3 years after KKR goes public, the value rate you talked about, if in fact it doesn't get to that level or the 90-day trading period, they will return. They will give them more of the firm. Essentially, to make good to 22.25. Wow.
Are you going to bed earlier now? I mean, are you okay? You were last week. You were in here at 6.
Very happy.
Today you're in here at 7.
6:20 out of bed today. Came into the parking lot at 6:57. That's pretty good.
You're talking to people who get up at 3:30.
Totally. I think.
Amazing. All right. At the Upper West Side.
Yeah.
It's still up here.
It was 13 minutes.
No shorter
It was very
commute.
foggy, so God only knows what it was.
All right.
David, thank you very much. We're going to talk more about this in the next hour with David as well, all the implications. David Faber. All right, the president of the Federal